Anglo-American said on Tuesday it has agreed to a merger with Canada's Teck Resources in what could be the biggest mining sector M&A deal in over a decade. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocabelli. So big news, and this is Reuters. Under the proposed deal, which will require regulatory approval in Canada and South Africa, Anglo-American shareholders would own 62% of the newly combined company, Anglo-Teck, while shareholders in Teck will hold 38%. Anglo-Teck will be headquartered in Canada, but have a primary listing in London, the company said. So Anglo-Teck is the name of the company, a new icon in the mining landscape here, created from previous icons. Anglo-American's London shares were up more than 7% in early trading after the announcement, while Teck's Frankfurt-listed shares jumped almost 22%. It's interesting. I thought to myself, I wonder how much Teck is going to be excited about this deal. Apparently, Teck investors are pretty excited. Both Anglo and Teck have been at the center of takeover interests in recent years, with Glencore pursuing Teck and BHP targeting Anglo for their extensive copper portfolios. The merger is expected to generate annual cost savings and efficiency gains of $800 million by the fourth year after completion. Anglo said the combined market capitalization of both companies exceeds $53 billion. That sounds pretty big, doesn't it? I mean, on one hand, I feel like it sounds huge. On the other hand, I think, these days, what's $50 billion? Anglo's chief executive Duncan Wanblad will remain CEO, while Teck's Jonathan Price will serve as deputy CEO. A true merger here. The two companies operate adjacent copper mines in Chile, Cabrera Blanca and Collahuasi, which are expected to deliver further operational benefits. Very interesting. So one imagines this has a lot to do with it. Copper demand is forecast to rise sharply, driven by the electric vehicle boom and emerging uses such as AI-powered data centers. And we often hear that now in terms of the copper story. But I mean, it's only the last, I would say, year or two that this has actually been mentioned, and the copper story was pretty bullish up until that point. So now a new big source of demand coming online with these AI-powered data centers. Of course, Anglo-American has put out a press release also this morning. It is Tuesday, September 9th. So from the press release, Anglo-Teck is expected to offer more than 70% copper exposure and outstanding further growth optionality embedded. Strong balance sheet underpinned by a larger, more diversified asset and cash flow base, including premium iron ore and zinc. Enhanced global capital market footprint, primary listing on London Stock Exchange, listing on JSE, TSX, and New York Stock Exchange. Headquartered in Canada, and committed to the heritage of both companies and their significant business leadership roles in Canada, South Africa, and the UK. And Anglo-American basically is going to own 62%, a little under two-thirds of this new entity, with Teck owning a little over a third of this new entity, 38%. And the merger is, of course, subject to customary completion and regulatory conditions and expected to be completed in 12 to 18 months. And this is also interesting. Boards of Anglo-American and Teck unanimously support and recommend the transaction. Seems kind of rare when we see true synchronicities at work here. The headquarters will be located in Vancouver, and corporate offices to support the global group in London and Johannesburg. So quite a big deal. Now here's Duncan Wanblad, CEO of Anglo-American, in the statement. We are unlocking outstanding value both in the near and longer term, forming a global critical minerals champion with the focus, agility, capabilities, and culture that have characterized both companies for so long. Having made such significant progress with Anglo-American's portfolio transformation, which has already added substantial value for our shareholders over the past year, now is the optimal time to take the next strategic step to accelerate our growth. We have a unique opportunity to bring together two highly regarded mining companies whose portfolios and capabilities are deeply complementary, while also sharing a common set of values. We are all committed to preserving and building on the proud heritage of both companies, both in Canada as Anglo-Teck's natural headquarters and in South Africa, where our commitment to investment and national priorities endure. Together, we are propelling Anglo-Teck to the forefront of our industry in terms of value-accretive growth in responsibly produced critical minerals. And we also heard from Jonathan Price, CEO of Teck. The merger of two highly complementary portfolios will create a leading global critical minerals champion headquartered in Canada. A top 5 global copper producer with exceptional mining and processing assets located across Canada, the United States, Latin America, and Southern Africa. It is a natural progression of our strategy and portfolio simplification, which created a platform to enable exactly this sort of transformative transaction. Bringing together our world-class copper assets, premium iron ore and zinc operations, and an outstanding pipeline of high-quality growth prospects provides enormous resiliency and optionality. This transaction will create significant economic opportunity in Canada, while posturing Anglo-Teck to deliver sustainable long-term value for shareholders and all stakeholders. So, again, massive news in the mining industry, a huge M&A. Anglo-American and Teck joining forces to produce a $53 billion behemoth, Anglo-Teck, which will have a 70% copper-based portfolio, owning projects side by side in Chile. One imagines that had a lot to do with it. So big news this morning. Now, more big news. Another exciting week here in the mining industry. The gold price hits new record as Fed rate decision looms. I had CNBC open. $3,694.70 per ounce on the CNBC gold futures. Quite something there. Let's see what Jackson Chen at mining.com has to say. Gold climbed above the $3,600 level for the first time on Monday, setting a new record as soft U.S. jobs data cemented expectations of an interest rate cut by the Federal Reserve this month. Now, what I wonder to myself, based on those conversations I've had with Jeffrey Christian, are people piling into gold because of a potential interest rate cut, or do people see potential market turbulence and are looking for a place to put their gains that they've made in the stock market? Perhaps a bit of both. And here is UBS analyst Giovanni Stanovo in a note to Reuters, quote, "We look for gold to rise to $3,700 an ounce by mid-next year." I mean, it might be by mid-afternoon, actually. Carlo Alberto de Casa, an external analyst at banking group Swissquote, said, "Rate cut bets are boosting the demand of gold. Moreover, the overall geopolitical scenario is extremely uncertain. We should consider that a significant part of demand is also coming from central bank buying." So another factor at work here. And indeed, that is true. Our following story here, this is Reuters via mining.com. China's central bank buys gold for 10th month in a row. China's gold reserves stood at 74 million fine troy ounces at the end of August, up from 73.96 million at the end of July as the central bank bought the precious metal for the 10th straight month. China's gold reserves were valued at $253 billion at the end of August, up from $243 billion before, according to data released by the central bank on Sunday. So quite interesting there. And of course, the stocks also enjoying the ride. We have a story from Bloomberg News via mining.com. Gold stocks break 2011 record high as investors seek safe havens. So it seems to be actually a confluence of causes here if we were to put on our, analyst cap. Sure, rate cuts, fair enough. Potential inflation concerns, fair enough. But also diversification is another one, as well as central bank buying. And so here is on the gold stocks. Trade anxiety, geopolitics, and threats to the U.S. central bank's independence have driven investors to the safety of gold, sparking a massive rally in miners of the precious metal. The New York Stock Exchange ARCA Gold Miners Index hit an all-time high and is on track to end the session at a record on Friday. It's the first new peak since 2011 when investors were snatching up safe haven assets amid Europe's debt crisis and the first U.S. credit rating downgrade. This time, a new sense of uncertainty has sent some of the largest stocks in the benchmark soaring, with Newmont, Agnico Eagle Mines, Wheaton Precious Metals, and Barrick Mining all gaining more than 80% this year. And I should mention, coming up this episode, we're going to have Sean Boyd, chairman of Agnico Eagle. I asked him about the recent developments in the gold market, along with Northern Miner Group president Anthony Vaccaro. We discussed the Great Canadian Treasure Hunt as well, a very fun initiative that we will learn all about in our feature interview coming up this episode, again with Sean Boyd and Anthony Vaccaro. So gold stocks doing well. Let's look at a couple of analyst quotes here. Martin Pradier, a Veritas investment research analyst, said, quote, "All my gold companies, the return on equity has proven to be almost twice as high as it was last year because the margin that they get from selling that gold has increased. So, of course, they should be hitting all-time highs." And we have another quote from Van Eck product manager Andrew Musgraves, who said in an interview, quote, "In past gold rallies of 2010 and 2011, for example, they kind of blew out their budgets and were penalized by the market for that," referring to gold mining companies. "But they're doing a very good job of maintaining their costs these days, and then that's translating to strong earnings." Scrolling down. Still, even with gold miners near all-time highs, the ETF is on track for its third year of outflows as investors embrace newer themes. Quote, "Their thunder is stolen a little bit by those more AI-related things and also crypto-related things that people look for more this year," said analyst Tiffany Zhang of National Bank Financial. Very interesting. So let's continue. U.S. tariff exemptions on gold, tungsten, and uranium take effect. Now, this was on September 8th, so you wonder, of course, tariffs have been creating all sorts of volatility, shall we say, in the metals markets, as we recall with copper. First shooting up, then dropping off a cliff. So this is by a staff writer at mining.com. Starting today, key minerals including gold, graphite, tungsten, and uranium are officially exempt from U.S. global tariffs under an executive order signed late on Friday by President Donald Trump. Now, wasn't there, I thought, a 93% tariff on graphite? Maybe that wasn't working out so well. Very interesting. These minerals, with the exclusion of gold bullion, are all considered critical for sectors including nuclear energy, aerospace, and advanced manufacturing, and are not produced in sufficient quantities in the United States. Also covered by exemptions are critical materials used in aerospace, electronics, medical devices, and some pharmaceuticals. So, interesting adjustments here. It's almost as if the strategy from the administration is put tariffs on everything, and when we start getting pain points, we can remove those specific tariffs that are giving us pain points. I remember the graphite industry in the United States was quite happy with the tariffs that came in, so quite a surprise on that front. Officially exempt. Now, another interesting story added to the mix is a story on Tether. Stablecoin group Tether holds talks to invest in gold miners. Apparently Tether, this blockchain-based stablecoin, just oozes out money. Boss of crypto company that posted first half profits of $5.7 billion has called the precious metal, quote, natural Bitcoin. And this is by Leslie Hook, once again, and Nico Asgari in London at the Financial Times. Tether, the world's biggest stablecoin company, has held talks about investing in gold mining, seeking to deploy its vast crypto profits into bullion. The company has held discussions with mining and investment groups about investing in the entire gold supply chain, from mining and refining to trading and royalty companies, according to 4 people familiar with the recent talks. Quite something. While gold has been a physical store of value for thousands of years, and Bitcoin has only existed as a digital instrument since 2009, there is growing affinity between some industry executives. Could also be a diversification strategy. Tether chief executive Paulo Ardoino has likened gold to, quote, natural Bitcoin. Quote, "I know people think that Bitcoin is digital gold. I prefer to think in Bitcoin terms. I think gold is our source of nature," he said in a speech in May. However, with the conservative gold mining sector, Tether's interest has been greeted with surprise and questions about whether the unconventional newcomer will succeed. Quote, "They like gold. I don't think they have a strategy," said one mining executive. Others are skeptical. Quote, "It is the weirdest company I have ever dealt with," end quote, said one commodity industry executive. And a follow-up story here, courtesy of Bloomberg via mining.com, same day, September 5th, late last week. Stablecoin issuer Tether Holdings is expanding its gold strategy by adding to its stake in a Canadian gold royalty company. Tether plans to buy approximately $100 million in additional shares of Elemental Altus Royalties, a firm that specializes in buying revenue streams from mining companies, according to a statement. Tether had already amassed a 38% stake earlier this year, a filing in June showed. So quite interesting there. Another huge headline this week, Zijin said to plan $3 billion Hong Kong IPO in world's biggest listing since CATL. This is Bloomberg News via mining.com. Zijin Mining Group's public spin-off of its international gold business could fetch more than $3 billion, according to people familiar with the matter, putting the planned Hong Kong listing on course to be the world's second biggest this year. The value and timing of Zijin Gold International's initial public offering could still change as deliberations are ongoing, the people said, asking not to be identified discussing a private matter. The listing could come as soon as this month, and investor interest in the offering has been exceptionally strong at a time of record high prices for the precious metal, one of the people said. A $3 billion IPO would be the biggest globally since Chinese battery giant Contemporary Amperex Technology Company Limited raised $5.3 billion in a blockbuster Hong Kong offering in May. Zijin is the world's third biggest metals miner company by market value and wants to boost output from gold mines that span Central Asia to Africa and Latin America. And we have a quote from Xiaofeng Li, senior partner at Beijing's Dentons, who is experienced in advising Chinese natural resource firms on overseas deals. Quote, Zijin needs a large pool of offshore money to invest and expand production in their assets. So gold, quite a few big headlines here. Another interesting story from the South China Morning Post. China, US, Japan race for control of key African rail routes in critical minerals fight. Infrastructure is no longer just about moving ore, it is about shaping global supply lines, one analyst notes. So I didn't realize Japan was in the mix here too. This is by Jevons Nayabyaj at South China Morning Post. A geopolitical contest is unfolding in central southern Africa, where major global powers are vying for control of key logistical routes amid a global race to secure critical minerals for the green energy transition. At the center of this rivalry lies the small town of Kapiri Mposhi in central Zambia, a strategic hub where three competing corridors, China's Tether, the US-backed Libido Corridor, and Japan's Nacala Corridor, converge. Observers say the race to build these corridors is not just about moving minerals, but a strategic effort by global powers to secure long-term influence over critical mineral supply chains and cut reliance on rivals. Kapiri Mposhi is the starting point, or western terminus, of the Tether Railway, which connects it to the Indian Ocean port of Dar es Salaam in Tanzania. It is also 118 kilometers from Ndola, a key city in Central Africa's Copperbelt region that links to the Libido Corridor. The Nacala Corridor network connects the landlocked nations of Zambia and Malawi to the port of Nacala in Mozambique. It also extends to major centers in Zambia, including the capital, Lusaka, about 200 kilometers from Kapiri Mposhi. Zambia is in talks with Chinese companies to build a major dry port in Kapiri Mposhi as part of efforts to position the town as a Copperbelt logistics hub. In May, Zambia hosted a Chinese delegation from the Xinjiang Uyghur Autonomous Region to discuss developing the Kapiri Mposhi dry port. According to Kei Zhui, a Beijing-based China-Africa mining lawyer, the dry port is set to become, quote, the true center of coast-to-coast corridors connecting the copper belt with the copper century. Zhu said that despite the lack of overall coordination between China, Japan, and the West, the three corridors with ports in Angola, Mozambique, and Tanzania would complement each other with Kapiri Mposhi as the hub. So, pretty interesting developments there in Central Africa. So coming up this episode, we are discussing the Great Canadian Treasure Hunt. We are joined by Northern Miner Group President Anthony Vaccaro and Sean Boyd, Chairman of Agnico Eagle. We discuss all the details of the treasure hunt, how it came about, and how you may have an opportunity to find $1.3 million in gold. Simply go to treasure.northernminer.com. And it is on public land, as Northern Miner Group President Anthony Vaccaro mentioned several times in the interview, importantly. And also coming up, we have Dale Verran, Chief Executive Officer of Fortune Bay, to discuss new developments at the company. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Dale Verran, Chief Executive Officer of Fortune Bay, for this week's Spotlight. Joining us today for this week's Spotlight, I'm very pleased to welcome to the program Dale Verran, CEO of Fortune Bay. Dale, welcome to the show.
Yeah, thanks very much for having me.
It's a pleasure to have you, Dale. Of course, you have a project which is in Saskatchewan, and I come from Saskatoon, so kind of near and dear to my heart here, looking at your website. So tell us, for those that aren't familiar with Fortune Bay, could you give us a little bit of background on the company?
Yeah, for sure. Fortune Bay is an exploration and development company. We listed on the TSXV under the symbol FOR. We also have a listing in Frankfurt and on the OTC. And we primarily focused on gold. We have two significant assets. The one is the Goldfields project in Saskatchewan. It's a near-term mine development. There's an updated PEA underway, and permitting is also underway for that project. And then we have a gold asset in Mexico. It has a historical resource on that project and significant exploration potential, both in the gold epithermal systems and then also through a larger copper porphyry at depth. We also have some uranium assets we've picked up during sort of the tough few years behind us here, where we acquired some really good projects on the northern rim of the Athabasca Basin, and those are all partner funded at the moment, providing some upside for shareholders and some non-dilutive revenues through option fees and management fees.
Okay, excellent. And so the flagship then is the Goldfields Gold Project in northern Saskatchewan. Could you tell us a little bit about the team first before we get into more details on the project?
Absolutely. Perhaps just starting with myself there, I'm the CEO, and my background is across the resource sector for 25 years. I'm a geologist by background, grew up in South Africa, worked across the commodity spectrum in Africa for a good 15 years, starting that with Goldfields, so a lot of gold experience through that major company, and making my way over to Canada on the uranium side and working with Denison Mines for a number of years, also based in Saskatoon, sort of really honed my skills on the exploration in the province, as well as developing a project through PEA, PFS phases. Assisting me in the team is Gareth Garlick, someone I've worked with for many years, going back to my days in Africa. He's well-versed across the mining cycle, very strong on the exploration resource estimation. So we form a very good lean, mean management team. We obviously have a CFO that's Halifax-based, together with some of our board. Our executive chairman, Wade Dorr, has got a really good track record of creating value, across a variety of sectors, and, started his career in the resource side. So very, really valuable resource on the capital markets and funding side, and then a really well-balanced board across, the auditing, governance, community, and exploration, with Bob Shaw on our board, who's been instrumental in some large discoveries through the Americas over the years. So really well positioned to execute on the company's plans.
And so the Goldfields Gold Project is indeed a gold-focused project. It looks like you've done a preliminary economic assessment in October of 2022. Could you give us some more details on the project? Fill it in for us. Where are you in the project, and what do you think is there?
Yeah, so Goldfields is strictly gold, and we happen to have some opportunities, uranium opportunities elsewhere on that northern part of the rim of the Athabasca. But Goldfields is really just gold focused, and it's a very simple, open pittable gold mining project. We have a defined resources there, across the board of around 1.2 million ounces. And there was a PEA done previously, which produced some very robust economics. We're looking to update that through an optimized mine and development plan, really looking to shorten the time frame to a construction decision, and also getting some permitting underway. The project has a long history, but really in the cycle, now's the time. And the project has some tremendous attributes in terms of infrastructure around the Uranium City area. There's a power line to site, there's a road to site. Uranium City has established a hub with a mining history and a community that understands mining. The project has also been permitted previously through an approved EIS, so we're looking to build on that through our permitting that's currently underway, really toward a optimized larger development for that project that's open pittable. The grades are among the best for open pit mines in the Americas, and a really favorable strip ratio. So we're really looking forward to this updated PEA we're currently busy with. That's going to be coming out in Q3. So we're aiming to get out before the end of September, and that's going to reflect these changes in the gold price. as well as our optimized plan to moving that project toward a construction decision.
Indeed, it is a very exciting time in the gold market right now. Gold above $3,700, incredibly US, as we Canadians like to say. Now, in terms of the project, you mentioned permitting. So is that the focus right now? It seems like you couldn't ask for a better time, actually, to be trying to get permits. Is that the focus on Goldfields right now?
Yeah, that's a really key aspect of the project. We've identified permitting as the critical path for the project. In other words, that could be the longest time component, but we're fortunate there to build upon an existing approved EIS. So that's underway. We've got terrestrial aquatics studies underway at the moment and looking to, provide some guidance on timelines once we've completed those initial studies and spoken to regulators. But in tandem, we're also advancing on the engineering side, and that's really being done through this updated PEA, which is going to set the stage for further work through PFS, FS.
Okay, excellent. And in terms of funding, do you feel like you have the funding you want and need? How are things looking on that side of things?
Yeah, we raised $3 million early this year to fund these initial plans for both Goldfields and our project in Mexico. So the two plans for Goldfields in terms of the updated PEA and the permitting plan, they're fully funded, as well as some of the catalysts identified for that Mexican project. We will look to raise money later this year or early next year, but so really well positioned to reposition and hopefully re-rate the company. There's a lot of value here that's not recognized. We do trade at a discount toward peers on our gold resources and obviously being under the radar.
And briefly on the Poma Rosa project in Mexico, could you just give us a little bit of a description of what's going on over there?
Yeah, so the project's got a history going back to, the 2003 to 2009 era where a historical resource was identified. It starts from surface. It's an epithermal system in these cover rocks. And there's gold resources, historical gold resources of 1.7 million ounces there with some tremendous high grades in the core of that deposit. We're looking to get that put into a current 43-101 and then start with drilling to expand the known resources. And that drilling will be focused initially in the cover rocks, which is these epithermal systems to expand the gold resources. But sitting below those cover rocks is a large porphyry system with a really exceptional geological setting and never been tested before. Previously, it was really a gold-focused company, and the drilling was shallow of soil anomalies. So we're looking to also generate some targets on that large porphyry system. We know there's copper in the system, and it's really a case of drilling some deeper holes to test that. So really exciting. What's key in Mexico as well, the land is owned by the community. They have the surface rights. We have the mineral rights. So we are progressing with the community to reach exploration agreements for that project, and that remains on track to restart exploration later this year.
Zooming out a bit then, Dale, how do you see things playing out here in the next, say, 6 months to 24 months? What is the roadmap here in terms of this, Goldfields project in Saskatchewan, perhaps the Poma Rosa project in Mexico? How do you see things playing out?
Yeah, so in the next 6 months, we've got 4 key plans identified for our gold projects, 2 at Goldfields, 2 at Poma Rosa. Goldfields, I mentioned the updated PEA, which is underway, results to come out very shortly in Q3. And then we'll make a decision as to when and how that project advances through PFS and FS. In parallel, that the permitting is going to continue. That's a critical path, and we'll be getting results from that toward the end of this year and engaging with regulators. Down in Mexico, the 2 catalysts identified there is to get the exploration agreements concluded with the community, which would enable restart of the exploration. And there we're planning some soil geochemistry, geophysics, followed by drilling to expand the existing gold resources and also start to test the porphyry system.
Excellent. So as we wrap up here, Dale, put it all together for us. What is your message for investors? What do you want them to take away from our conversation here?
Yeah, Fortune Bay is quite unique and really well poised for this stage of the market. We offer both stability and growth. Stability from our robust development asset in Saskatchewan, which really underpins our value, and then tremendous upside with our project in Mexico. It has enormous exploration potential, we believe, to expand resources as well as discover new ones. And then underlying that and sort of in the background are uranium assets. We generated those at a difficult time in the market. They were low-cost acquisitions made through staking, but we used our time wisely there to take advantage of this uranium cycle as well. And those are now partner-funded, retaining upside for our shareholders, but also providing a form of non-dilutive capital that helps fund a portion of our G&A. So I think we're a really unique, well-balanced story that manages risk well, has limited downside, but enormous upside. And, we've done this for quite a few years to position it for this cycle and really been disciplined about how we deployed capital and kept a really tight structure, and you can look at us compared to peers on that front. So we're offering a high leverage per share value creation as we move forward, and that's certainly baked into the plans we have for the company.
Dale Verran, CEO of Fortune Bay, thank you for joining us and sharing what you're working on at the company.
Thanks very much for having us, Adrian. Good talking to you.
And if people want to learn more, they can go to fortunebaycorp.com. Thank you once again to Fortune Bay for sponsoring this week's episode of the Northern Miner podcast. Turning to the website, a massive theme that I've seen bubbling to the surface over recent weeks and months is recycling. And here, quite an interesting story. Glencore's former head of recycling launches critical minerals processing firm. This is Reuters via mining.com. The former head of Glencore's recycling business is launching a U.S.-based metals processing company with the goal of lowering the cost and time to refine copper and other critical minerals. The move comes amid increased pressure on industry from Washington and other governments for better processing options to boost the supply of minerals for artificial intelligence, computer servers, weapons, and other electronics. Kunal Sinha left Glencore last Friday after nearly 14 years in various roles, most recently as head of the recycling division. On Monday, he formed the New York-based processing startup Valor with technology developed by the University of Illinois at Urbana-Champaign. Valor's technology uses ligands, a type of molecule, to bind to a metal when placed in a solution and an electric current is applied. For instance, the ligand could be programmed to bind the copper or rare earths and not nickel. Indeed, we have a guest coming up next episode that is going to discuss a lot of the very interesting overlap now between biotechnology and mining. Continuing in the story, the technology can in theory be used to extract a range of metals from hard rock mines, recycled batteries, or deep-sea nodules, and it could be at least 10 times cheaper and faster than traditional processing methods without producing any waste, Sinha said, although it needs to be tested on a larger scale. Sinha said he left Glencore partly drawn by the appeal of starting his own company. Quote, "There is a lot of value to be created by improving minerals processing in the West," said Sinha, 44, who is also an advisor to rare earth magnet startup Realloys and an investor in magnesium processing startup Magrithi. The company is launching a fundraising push with the goal of developing a demonstration plant in Massachusetts or New York. Full commercial production of at least 5 metals is expected within 2 to 3 years, Sinha said. Glencore declined to comment. Also on the recycling theme, India approves plan to recycle critical minerals from waste. This is Bloomberg News via mining.com. India's cabinet approved a $170 million U.S. incentive program to boost recycling of critical minerals from batteries and e-waste, stepping up efforts to secure access to rare earths. Part of the National Critical Mineral Mission, the scheme will run from fiscal 2026 to 2031 and is aimed at building domestic capacity to recover minerals from discarded electronics and used batteries. The effort is part of a push by the Indian government to secure rare earth supplies that are crucial to EV makers and diversify away from China. Despite signs of a thaw in India-China relations, automakers in the South Asian countries still lack a supply of heavy rare earth magnets. Continuing on, Flash Metals USA wins Department of Defense contract to recover gallium from waste streams. So more recycling. Metallium said on Tuesday its Flash Metals USA subsidiary has been awarded a Small Business Innovation Research contract by the U.S. Department of Defense valued at $65,200. The award will apply to Metallium's proprietary heating process for recovering gallium from waste streams, including LED scrap. These feedstocks also contain germanium and other valuable metals, broadening the project's strategic impact, the company said. Last month, Flash Metals reported it has made progress on its technology campus in Chambers County, Texas, the site of its first commercial-scale metal recovery plant in the U.S. Meanwhile, in Quebec government ends funding for Northvolt battery project. It's Bloomberg News via mining.com. The Quebec government has walked away from Northvolt AB's Canadian electric vehicle battery plant, closing the chapter on a high-profile project derailed by the company's bankruptcy. Quote, "Today we are ending our funding of Northvolt in Quebec," Economy Minister Christine Frechette said in a news release. Quote, "As the company has not presented a satisfactory plan with regard to Quebec's interests, we are asserting our rights in order to recover as much of our investment as possible. This venture has proved unsuccessful, and we are obviously disappointed." In August, Lyten, a California startup that develops lithium-sulfur batteries, agreed to acquire all of Northvolt's remaining European assets. No financial details were released, but the purchaser said then it was buying the assets at a significant discount to their estimated value of roughly $5 billion. Lyten had showed interest in the Canadian project, which was estimated to cost over $5 billion to build, but the Quebec government was cool to the possible acquisition. Northvolt's collapse came at a high political cost for the governing party, the Coalition Avenir Québec. Quote, "This decision is deeply regrettable for Northvolt North America, particularly given the significant efforts already made and still ongoing to identify a buyer," Northvolt's Canadian subsidiary said in an emailed statement. Quote, "We wish to underscore that Northvolt North America is not in bankruptcy and retains substantial resources to relaunch the project." Continuing on, interesting headline here. Germany urges Europe to stop China buying so much copper scrap. This is Bloomberg News via mining.com. Europe needs to help its copper smelters by stemming huge flows of scrap metal to China, Germany's economy minister Katharina Reiche said, potentially opening up a new front in trade tensions. Quote, "The Chinese are buying copper scrap from the market in huge quantities," Reiche said at a Siemens Energy event in Berlin on Monday. Quote, "Large German copper smelters are no longer getting any raw materials." So this is quite interesting. Apparently it costs money to start and stop these smelters, so sometimes they're even willing to pay in order to keep the feed coming into the smelter. So more evidence that there is not enough copper for all of these smelters. Continuing on, China's aluminum factories are changing to escape a crushing price war. It's Bloomberg News via mining.com. So this is the whole other side of the critical minerals debate, is the processing. And it's quite a different kind of story here. In a sense, it seems as if there's too many refineries and smelters and processing facilities, but there's also the issue of there's too much concentration in China for people's comfort. Even if the world doesn't need a new smelter, you still have to build one in your country because of the concentration. For Lang Zhu, who runs an aluminum factory about 100 kilometers north of Hong Kong, there's only one way out of China's vicious spiral of excessive competition: shift away from inexpensive metal for window frames and door handles, and towards the specialized alternatives needed for iPads and airplanes. Guangdong province has long been a powerhouse of light manufacturing. Today, though, many companies like Liang's are battling to survive in the era of, quote, involution, a term commonly used to describe the country's intense, self-harming industrial race. China's property boom is over and has left behind small to medium-sized manufacturers saddled with overcapacity, evaporating margins, and a relentless struggle for customers. Quote, "Without sufficient profits, there will be no funds to invest in innovation, research, or in finding solutions for society," said Liang, general manager at Guangdong Mingzhu Metal Material Technology Co., a company he founded after returning from a spell working in Australia. Quote, "That's a dilemma for us, so we look for ways to get out of this so-called involution." Continuing on aluminum, Canada Aluminum Hub diverts exports to Europe as U.S. tariffs bite. This is Bloomberg News via mining.com. Aluminum producers in Quebec are sending more of the metal used to make cans and car parts to Europe as U.S. tariffs make their shipments more expensive for American customers. The U.S. market accounted for 78% of aluminum exports from the Canadian province in the second quarter versus 95% in the first quarter. Europe's share rose to 18% from just 0.2%, according to S&P Global Market Intelligence. The data are the latest indication of the disruptive impact of tariffs in North America's highly integrated market. U.S. President Donald Trump first reinstated a 25% tariff on aluminum imports in March, then doubled the levy in June. Sprawling processing plants owned by Rio Tinto Group, Alcoa, and Aluminerie Alouette mean that Quebec represents about 90% of Canada's aluminum-making capacity, with the U.S. as the province's natural buyer given the close proximity. Scrolling down, Alcoa announced in its second quarter earnings report that it has diverted about 100,000 metric tons of aluminum shipments from Canada to destinations other than the U.S., such as Europe, but did not comment further upon request. Very interesting there. Also on the aluminum front, Canada to unveil promised aid for aluminum soon. This is Reuters via mining.com. Canada will soon unveil a series of promised measures to help the steel and aluminum sector deal with U.S. tariffs and will also aid canola farmers, government officials said on Thursday. Industry Minister Melanie Joly told reporters in Toronto that aid designed to help aluminum companies overcome uncertainties caused by the tariffs could be rolled out in the coming days. Joly also said Ottawa would help the steel sector pivot away from U.S. markets, but did not give details. And finally, with the diamond market. Lab-grown gems are robbing Botswana of its diamond riches. This is Bloomberg News via mining.com. Across Botswana, the line of patients outside government clinics are lengthening, construction companies dependent on state jobs are firing workers, and university students are threatening to boycott lectures after not getting the allowance increases they were promised. The economic slowdown is a sharp reversal from just a few years ago when the world's richest diamond deposits allowed the sparsely populated desert nation of 2.5 million people to invest in free and efficient healthcare and plow money into funding tertiary education for students both at home and abroad. And we have a quote from President Duma Boko, who said in a speech in August, quote, "For decades we have leaned and relied heavily on diamonds. While they served us well, we know painfully today that this model has reached its limits. This is no longer an economic challenge alone. It is a national, social, existential threat." So painful economic times as a result of a changing diamond market in Botswana. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. Very interesting developments here. The U.S. 10-year bond is yielding 4.06%, down significantly 0.23% on the week. The yield on the UK 10-year gilt also falling to 4.62% from 4.79%. That is down 0.17% on the week. Italy's 10-year bond is yielding 3.51%. That is also significantly lower, down 0.19% on the week. The German 10-year Bund is yielding 2.66%. That is down 0.13% on the week. The Japanese 10-year bond is yielding 1.57%. That is down 0.06% on the week. And the Chinese 10-year bond is yielding 1.79%, up 0.02%, edging higher on the week. Turning to precious metals, gold is trading at $3,694.70 per ounce on the CNBC futures. That is $141 higher than last week, so big jump in gold. Silver is trading at $41.90 per ounce. That is $1 higher on the week. Platinum is trading at $1,380.60 per ounce. That is $40 lower on the week. Palladium is trading at $1,131 even per ounce. That is down $17 on the week. So gold and silver higher, platinum and palladium lower. And turning to industrial metals, copper is trading at $4.49 per pound. That is a penny lower than last week. Iron ore is trading at $104.49 per metric ton. That is $3 higher on the week. Aluminum is unchanged for the third week in a row at $1.19 per pound. Lead is a penny lower at 90 cents per pound. Nickel is back below $7 at $6.90 per pound. That is 11 cents lower on the week. Tin is trading at $15.57 per pound. That is 31 cents lower on the week, but still doing quite well. Cobalt is unchanged at $15.12 per pound. Lithium falls for the second week in a row at $10.48 per kilogram. That is 68 cents lower on the week. Uranium is trading at $76.20 per pound. That is 45 cents lower on the week, so barely lower in uranium. And zinc is higher at $1.31 per pound. That is 2 cents higher on the week. Zooming out, the stars of the show are definitely gold and silver, where the rest of the metals complex edge basically more or less sideways to lower, with the exception being iron ore, which is showing the strongest price we've seen in quite a few months at $104.49 per metric ton. And those are your metal prices. Coming up, I'm very pleased to welcome to the show Sean Boyd, chairman of Agnico Eagle, former CEO, member of the Canadian Mining Hall of Fame, as well as recipient of the Northern Miner 2017 Mining Person of the Year Award, along with Anthony Vaccaro, president of the Northern Miner Group. We discuss the Great Canadian Treasure Hunt, which you can find at treasure.northernminer.com, all of the details of this wonderful initiative to help educate the public on mining, and much more, as you're going to learn from both Sean and Anthony. We also discuss Agnico Eagle and the secret of its incredible performance and just how well it is doing, as well as mining in Canada. At the end of the interview with both Anthony and Sean, it's a wonderful discussion. I hope you enjoy it, and I will see you on the other side. Joining us today, I am very pleased to welcome to a special episode of the Northern Miner podcast, Sean Boyd, chair of the board and former CEO of Agnico Eagle, as well as a member of the Canadian Mining Hall of Fame, as well as Northern Miner 2017 Mining Person of the Year, as well as Anthony Vaccaro, president of the Northern Miner Group, to the podcast. Gentlemen, welcome to the show.
Great to be here.
Thank you so much, Adrian. It's a pleasure.
I'm excited here. There's a lot going on with the Northern Miner. It's across mainstream media, the Great Canadian Treasure Hunt. Before we get started on that, though, with Sean Boyd here and gold breaking $3,600, at least on the futures here on CNBC, I thought maybe we could start with gold. Agnico Eagle has had an amazing couple of years. Sean, how are you doing? And it must be pretty good being chair of Agnico Eagle these days.
Yes, I think that's an understatement, but this is a long time coming in terms of gold and the gold mining industry. And I think we all expected, as we sort of worked through our careers, that we'd see the day where we could have prices that would generate significant cash flows in our business. It's not an easy business, but certainly at this point in time, not only are the gold miners generating significant cash flow and significant free cash flow, but there's the expectation that the gold price could continue to go higher. So that generates a tremendous excitement within the industry, but certainly among investors. And we're seeing that both in the gold price and we're seeing that in the gold equities. But I think we're in a period now where gold's doing everything that we expected it to do when we entered a period of sort of disorder and discomfort, let's say, whether it's from a geopolitical standpoint or whether it's from an investor standpoint. But gold's that true store of value, that preservation of wealth, but it's also being looked at as that sort of base and foundation to other sort of newer type investments. So it's covering so many bases here today. But when you see central banks buying in the quantities that they're buying, when you see the US dollar weak and you see other countries, putting up alternatives to the US dollar, this has gotten people running towards gold. So we're certainly, really enjoying this, given that we've had periods in this industry where it's been a bit of a challenge. And I can remember in my early career and my early times as CEO, gold was around $260. Fortunately, the costs at LaRonde were $152. So we were still making money, but this is certainly a great time. But we don't think it's over. We think this could easily get to $5,000 an ounce and do that over the next 12 to 18 months. So we're super excited and the industry's super excited.
Okay, excellent. And how concerned are you, in a sense, on costs? Like, are they in line? Are they rising? I mean, we've seen, a $1,500 all-in sustaining costs. How do you feel on the cost side of things?
Well, there's two parts to that. There's not a lot of inflationary pressures in the inputs, not excessive inflationary pressures in the inputs, but what tends to happen in a rising gold price environment, you have to look at the individual mines. And there are opportunities to mine lower grade material that's very near existing infrastructure. And the temptation is you're still generating really high quality cash flow from that lower quality ore. So why not take it? But that will raise your unit cost. So you have to balance that out. And I think each of the individual mines across the industry, companies are looking at those opportunities and trying to take advantage of that easy money, let's call it. So that could have an impact on costs and raise all-in sustaining costs. Gold was to go down, you'd sort of walk away from that sort of lower quality ore and get back to more of a traditional mine plan. But if you actually think about it, most of the reserves are done at, let's say, $1,400 an ounce. That's super ultra conservative. So there's opportunities to expand the footprint of mines and grab more gold, let's say, in terms of mining it. That would certainly raise the cost. But I think you have to look at it now as how much cash flow is being generated from these businesses, how much free cash flow is being generated, and then compare these gold businesses and these gold mining companies to traditional industries. You know, if you look at Agnico from a market cap perspective, it's number 10 in Canada. It's surpassed one of the large banks. And that's simply based on the cash flow generating ability of Agnico Eagle in this current market. So that's exceptional. And if you look at it from a market cap perspective in the world, I think Agnico is around number 280. So this is a sizable business generating significant cash at these prices.
And just finally, before we get to the Great Canadian Treasure Hunt, what is the philosophy of Agnico Eagle that you think it's outperformed most of its peers in the last couple of years? Why is that? You know, you were CEO there at one point. What is it about Agnico Eagle? What do they do differently, perhaps, over there?
Well, I think if I look at over my 4 decades here and 24 years as CEO, it was really the consistency of the strategy and the effectiveness of that strategy and the strong alignment between the skill set of the management team and the strategy and the opportunity set. So Agnico's history is not one of, changing its stripes every 2 or 3 years based on the way the wind's blowing. It was really, we started out a few decades ago just trying to build a high quality business that happened to mine for gold. And so that's why we were able, I think, manage risk, but manage risk in a way where we didn't lose sight of opportunities and we didn't sort of freeze and not move on opportunities when we saw them. So it was an ability to make decisions. And so if you look at our strategy today, it's the same strategy 10 years ago, same strategy 20 years ago, 30 years ago, same strategy when I started in 1985. Put the money in the ground, take geological risk, keep financial risk low, keep geopolitical risk low, and keep the business simple and easy to understand. Don't complicate it. Mining's hard enough.
Adrian, if I could provide a little more color, just as someone that entered the industry in 2005 as a reporter, was covering Agnico Eagle, I can tell the listeners that some will remember from 2005 until about 2012 when we had the pullback on gold. The flavor of the month of the years then was to go into high-risk jurisdictions, chasing big elephants, so parts of Africa and other parts of the world. And Agnico never went for that trend. So when Sean is referring not going for the flavor of the day there, that was a really shrewd move to stick. I mean, what was high risk, Sean? Finland? Your one outside of Canada was Finland, Kittilä. What an amazing asset. And what a mine that has turned into with no, I'd say that jokingly, there was no risk, really, geopolitical risk. And to be able to do that, and then to layer in the technical expertise. I'm just an outside observer. I'm independent in this. But no other company had the amount of technical expertise that Agnico had. At one point, they were building 5 mines at the same time. The amount of expertise you need in-house to do that, and the culture Sean created to retain those people. When you're doing that en masse, to be able to make people feel part of the team and want to be there is very, very unique. No, it's not easy to replicate what Sean and his team has done there. From the outside looking in, those are some of the hallmarks that I saw that really separated you and your team, Sean, from everybody else.
Yeah, and it kind of brings us to our topic of the day here, which is Canada and the Great Canadian Treasure Hunt. Of course, Agnico Eagle has most of their projects in Canada and also in the Arctic, which actually I want to ask Sean about later. But let's get into the Great Canadian Treasure Hunt. Sean, what is your role here? How did you get involved in this Northern Miner Great Canadian Treasure Hunt?
I think the essence of this really is connected to our long history in the business, almost 70 years. And through that history, and even when I started in the early days, our founder, Paul Penna, was tightly connected with the Northern Miner through Mort Brown. So, we knew the contribution that the Northern Miner was making in terms of chronicling and telling the story of mining. And so we were sort of sitting around and realizing as an industry, we're not doing enough to really tell that story. And we started to do a little bit pre-COVID. We started a social media campaign called We Make Mining Work, which was modest, but it was really designed to say, look, mining done well can make a major contribution. And then more recently, we started to tell the story or allow the Nunavummiut in Nunavut tell the story of the North and tell their story through a podcast that we've put together called The Arctic Edge. And we've just completed the 10th episode of that podcast, and we'll likely do it again next year. And so that allowed us to get the message out to Canadians more broadly about the opportunity set that exists in the North and the strength of the story of the North and the people of the North. And then we said, well, we need to do something even more. We need to tell the story to 40 million Canadians on, the contribution mining's made to the country and how well positioned the industry is to continue to make those contributions. And we Anthony invited us to the 110th anniversary party of the Northern Miner during the PDAC this year. And around the room, they had a number of photographs of mining history and events in mining. And I was going around looking at them, and I mentioned to Anthony and Denis at the time, I said, there's probably a way that we can sort of work together and use the storytelling that you've put together over 100 plus years and the pictures, etc., and use that as the basis to get a wider message out on mining to Canadians. And so we agreed to meet. We met and we talked sort of around budgets and stuff. And Anthony and his team went away and they came back and they said, we got a crazy idea. We got a real crazy idea to use as a foundation to tell the story. And the idea was to bury $1 million worth of gold somewhere in Canada and have a contest to find it. And on the back of that, tell the story of mining and how well mining's positioned. And we're sort of shaking our heads going, man, that's kind of crazy, but that is going to work. That is something we need. We need to sort of shake the trees and get people to pay attention. So here we are. And I think the other wrinkle from Agnico's perspective is we were sort of wondering, well, what form should that gold be in? And we just have been in a position, Agnico, in the last couple of years to be working with the Royal Canadian Mint and providing gold from some of our mines so that the Mint could cast a 1 ounce gold maple leaf from a single source mine. The first being the Meliadine mine in Nunavut, and the second being our Detour mine in Ontario. And so we said, boy, let's see if we can get a couple hundred plus coins from the Detour mine that the Mint has cast, and we were able to get that. So there's another unique angle here. It's not just $1 million worth of gold, it's $1 million worth of gold in the famous Canadian 1 ounce gold maple leaf, with all the gold in that maple leaf coming from one of the world's largest gold mines, which happens to be in Ontario and owned by Agnico Eagle. So all part of a great story. So we're excited to be part of this.
Yes, I've held one of those maple leafs in my hand at one point, and they're surprisingly heavy, actually. In a sense, everybody should do that at one point in their life. So just to boil it down then, Sean, what is it that you hope to accomplish here? Like, is this ultimately an educational mission? What is it that you hope from your side of things to see happen here?
Well, I think, part of this is really to have fun and to celebrate the success of mining and the success of Canada in a real fun way. So it's always good to have fun. But there's also a message here. And I think the message is that I think we collectively understand that Canada's at a point in time where we have to make some important choices on how we're going to develop our economy, how we're going to focus on our sovereignty. And we think one of the ways to do that is focus very much on industries where we have a competitive advantage and we're really good at, and we have a strong history and we have great skills, and that's mining. And so on the back of the Northern Miner Initiative, and it's really a mining industry initiative because there's other mining companies involved besides Agnico, it's to, come together and use this platform of the Great Canadian Treasure Hunt as a way not only to tell the story of mining and its history through the clues and through the competition, but also explain how well mining's positioned to benefit Canada and Canadians going forward, particularly at this time where we're looking to generate lots of value within the country on our own. But also, I think it's important from an education standpoint to reach the young people, to let them understand that there is a really good industry that they should consider in terms of employment and careers. They don't really know a lot about it. So part of this, as Anthony knows, is to get out to the schools as well, to tell the story about mining. Anthony's going to do some, he's talked to me. I'm prepared to go out and do that as well, and really use this as a way to sort of be a catalyst for getting out and telling that story. So there's lots of angles here, and we see this playing out over the next few months, and who knows what we're going to do after this one. So it's very exciting.
Exciting indeed. And Anthony, could you give us some details then? I guess maybe we could start with, what is from the Northern Miners' perspective, of course, you being the president of the Northern Miner Group, what do you hope to see happen here with the Great Canadian Treasure Hunt?
Well, Sean captured it very, very well. We within the sector are, hopefully, most people within the sector are aware of the amazing contributions that the sector has made to building this incredible country that we have. There's so many stories there that we just feel haven't been celebrated and really appreciated. And there's this disconnect, right? There's a disconnect in the general public between where things come from and how important metal is and how important the mining industry is to this incredible country around us, both in terms of what's been built up, the present, right? The idea that absolutely everything that you touch that isn't just part of the natural world is related to mining. So even if it's not metal, it was made using metal or it was transported using metal. So that's the piece in the present. And then the future, right? If Canada is going to remain strong, if we're going to remain sovereign, it's not a far leap to realize how important mining is to that. The critical minerals, the expertise that we have in the gold sector to create world-class leading companies like Agnico Eagle, the green revolution, how much green energy was requiring more metal. Any of the great things that we want to do looking into our future is connected to mining and metals. And this, as Sean just wonderfully said, here was a chance to kind of bring that to the fore in a very fun way, in an emotionally engaging way. I mean, my goodness, who doesn't love a good treasure hunt, right? And in some very visceral way, treasure hunts are related to the mining industry, right? We're pulling wealth out of the ground as a sector. And so this was a fun way to kind of do that. I think we're going to see the timing was right. The general Canadian public is hearing more about critical minerals. They're seeing more important policies coming from the federal government around this file. I think there's an inkling here, and this was a fun way to kind of step into that opening that's been made to really highlight and to show people just how great the sector can be. It's not the same sector it was 50 years ago. And in Canada especially, we're leading the charge in terms of mining responsibly, highest environmental standards, really strong community relations programs. So we want to make sure that everyone is aware of that. And as Sean said, that quickly moves into education, because I think when people see that, then this is the sector to get excited about. It's exciting to study geology at university, or maybe go into mining engineering and pursue a career. So there's a lot of great stuff that's going to come out of this. We're really thrilled that this all did start with Sean coming to us, like you said, at that party. And the CEO of Earth Labs, I got to give Denny Laviolette a shout out on this, because this was his brainchild. He came into my office and he said, I got a wacky idea. Let's do a treasure hunt. Let's talk to Sean about doing a treasure hunt. And, Sean saw it right away and went with it. And then that led to more support. So I should also say, I do want to highlight, after speaking with Sean and getting this amazing support from Agnico, Kinross Gold, IAM Gold came on very quickly, Alamos Gold, the World Gold Council. So we're really seeing EY, Sprott Money. Eric Sprott is a big supporter of this as well. So we've really gotten excellent support it's an industry-wide initiative. It's allowed us to do some really cool things. And in addition to the 1 million, which Sean is even more than 1 million, because what it is 217 gold ounce coins from Detour Mine. As Sean said, amazing mine right here in Canada. But we valued that as of, I think, May 28th or something like this, when gold was not where it is now. So I ran the numbers yesterday, and this is almost worth 1.1 million now. I mean, it's 1.085, I think, is the number right now. So if gold keeps on this tear, this is going to be more than $1 million because it's set amount of gold coins. But it gets better because in addition to that, we're doing 12 other jurisdictional prizes of $25,000 in gold coins, which will also grow in value with the price of gold. So those will be coming out. We'll be doing those once a month to even engage with more communities as we go through this incredible campaign. So there's a long-winded answer to a simple question, Adrian, but I can't help myself. I'm pretty pumped about it.
It is pretty exciting, and it's great to hear, really this desire on both your parts to spread education on mining in such a positive way, actually, in kind of a fun way, as you point out, Anthony. So in terms of the contest itself, we probably have some listeners who are kind of curious as to how this actually works. Anthony, could you give us some details on really the framework of this contest? How do people participate in the Great Canadian Treasure Hunt?
So what everyone needs to do is just go to treasure.northernminer.com. We have an amazing webpage set up there. You need to be 18. You need to sign off on the legal disclaimer, and then you're good to go. It is no charge to enter this contest. You can just go to the site. You can start with a very cryptic but beautifully written poem that has the clues embedded in it to get you in the right direction of the treasure. It's not easy. There's a lot of money on the line, so we weren't going to make it easy, but it's a lot of fun. And there'll be more clues coming. Clues will be embedded in stories about the history and the future of mining, in videos along the same themes. So we'll be dripping out this really great high quality content with clues embedded. So it's a great way for people to engage with what this sector is all about and find some clues and get out there and hunt some treasures down. So you go to treasure.northernminer.com. You say you're 18, you sign off on the legal, you can start hunting. Now, we have tiers though. So if you want to be emailed an extra clue and to stay more inclined, then you just sign up for the free email, totally free, and that gets you rolling even better. And then the final level is to become a Northern Miner subscriber, which you should be anyway, because it's been the place of record of the mining industry for over 100 years. And now with gold doing amazing things and the sector being so important to our economy, where else would you want to go for your news and your information? But if you do subscribe to the Northern Miner, then we're going to make it even easier. So for Northern Miner subscribers, we're going to collate all the clues together as they come out. They'll be in one spot for you. The clues will be released first to Northern Miner subscribers, but they will come out for everyone else shortly after. So there's a little bit of an advantage there and a bit of an incentive to sign up for the Northern Miner.
So in other words, there will be clues that are going to be dripped out over time, and it will be clear in a sense if people subscribe that they can go, oh, this is the story with the clues, and that just perhaps another poem or whatever the case might be, that sort of thing. It's not like they just read all the articles and then a clue might appear. There will be a special article. Is that correct?
Correct. That's a great point, Adrian. That's a great point. Yes. For subscribers, we'll make it really easy because, like I said, they'll all be collated. But again, when any clue comes out, it is available for everybody. It is free. So you don't have to worry about it. This is open for all Canadians. We want to engage as many people as we can, and we're having great success in doing that. We already have almost 100,000 individual users that are engaging with the website. So those are real individuals. So we can say we're closing in on roughly 100,000 people that are in some way already engaged in this contest. We're closing in on 30,000 people that have signed up for that email newsletter to get that extra clue, and we're getting more people signing up to the Northern Miner. So we're getting really great traction. People are getting really excited. We're getting more media requests, it seems, with every day to go on radio and to talk about this. CTV did an excellent article. If anyone just Googles Great Canadian Treasure Hunt, you'll see the CTV article. A journalist named Charlie Buckley did a great job, really got into it himself, just had fun with it and tried to parse out what this poem could mean and what these clues could mean. So that's a really fun place to start as well. And that was just because a journalist thought it was a really cool idea. So it's starting to make some waves, and we'll see where it takes us.
I'm seeing it on my Instagram, actually. So yes, it is definitely getting some reach out there. So that's at treasure.northernminer.com. Sean, what has the response been for you? Have you heard from people? Have colleagues discussed it at all? And what is your role right now? I suppose it's doing interviews and discussing it. What has the response been so far?
The response has been excellent. And it's kind of funny is that people, hey, have you heard about this? I said, yeah, we're actually kind of involved in a way. And so I think it's one of these things where you put it out there and then you put it out there mid-August and people are still wrapping up vacations and just getting ready for school. So we're in this period now where things are settling down. It's starting to get way more traction, as Anthony said, with the CTV, national news in Canada picking it up. So I would expect this thing will start to snowball in terms of interest level, and we're going to get a lot more excited participants. Like, this is tailor-made for classrooms, for schools, sort of collectively work on this in a sort of an educational way. So for workplaces to participate as well, there's lots of opportunity here. So the fact that just early on there's 30,000 new signups to the Northern Miner, tells you that it's getting off to a very strong start, and it's only going to get bigger and better as the interest level develops.
It all sounds very positive from over here. Anthony, is there a time limit on this? Like, could this go on for quite a while? I guess, how do you see how things, roll out here over the coming weeks and months? Could someone theoretically find it tomorrow, I guess? Or how does this work?
They could. It'd be very, very difficult to, but they could. Absolutely. That's the fun of the whole thing. But listen, what's cool about this, there's other examples of treasure hunts that have been done. There is one in France called the Golden Owl. 30 years. 30 years. There was one in the Rockies in the southwestern United States. Fenn's Treasure. There's a Netflix documentary on it. 10 years. So they have been done, and they can take very long. What I think is really cool about this, as we've brought in a certain kind of corporate rigor to it, and by doing it in this way where we're dripping out clues, it gives us some measure of control. So if we feel that it's going on way too long, we can release more clues and slightly easier clues. So we have that at our disposal. The legal disclaimer says that, it wraps up by the end of next year, but we just roll it over from there if it hasn't been found at that point. So, but that's more that if someone does find it, we don't want it just sitting out there. They have to claim it by a certain time. That's the only kind of deadlines that we're considering here. But no, it's a big, wide open treasure. I would anticipate someone finding it within this year, within the calendar year. And then it'll be fun to discuss if we can do another one for people. The Canadian public really loves it.
And as far as what people are looking for, are they actually looking for like a pot of gold, so to speak, or is it something else that you will be able to, redeem?
Well, we did discuss that. Sean, I, and Denny all love the idea of just having actual gold in a treasure chest. That'd be super cool. But the lawyers did not love it. So it is a physical chest. It's a physical chest. It's on public property, so there's no need to trespass. Do not do it. Do not do that. It is on public property. It is placed in no harm's way. I want to be very clear, though, when I say it's been placed. I have no idea where it is. I have no clue. We got to have specialized third party to handle this piece, the cryptic clues, and where it is. We in the Northern Miner team, we do not know. So don't bother us. We're as blind to this as anybody else. But it's been placed in a place where you don't have to climb a mountain. You don't have to cross a crazy river. So there's no harm to you. It's on public land. So, yeah, we've made it kind of as safe and available to everyone as we possibly could. So this is about getting out there, solving the clues, and finding it.
Just finally on the contest, and then I want to just zoom out a bit with you guys as we wrap up here on Canada and mining. But as far as the contest, then, Anthony, how are you going to measure the impact of this when it's all said and done? Will it be subscribers? How are you going to assess this once the treasure is found?
Yeah, once we get it rolling, we're going to be surveying. Now we're getting a good collection of people that have actually signed up. So that allows us to ask them questions. What were your impressions of the mining industry when you began the treasure hunt? And then we can follow up later. So there's very direct ways to do it. The indirect ways is just to see. Now we live in a world where everything is measurable. So with all the social media that's going on around this, the influencers that have picked it up, the reactions to that, the likes. So we can do very strong sentiment analysis. Our parent company, Earth Labs, has specialties along these lines. There's a lot of data scientists on the team. So we'll be collecting all that, and we think we'll be able to really take the pulse of the industry. Sorry, Adrian, I should have been more clear on the last one about the treasure chest. So it is a physical treasure chest, but it has an alphanumeric code in it, not the gold coin. So when someone finds it, there's an alphanumeric code. They take a photo of themselves with the treasure where they found it, and they send us the alphanumeric code. Then we will have a little ceremony where we hand over the 217 gold coins to them at a later date. So that's how that piece works.
Thank you for clearing that up. It all sounds very exciting and fun. And this is only for Canadian residents, is that correct?
That is correct, yes.
Sean, as we zoom out here, what is your sense of how Canada is doing? I mean, we saw mining become an election issue, maybe for the first time in my lifetime, at least in a positive sense. What is your sense of how Canada is doing in terms of natural resource development? You've spoken about the Arctic in the past, a very interesting area. What is your general sense of where things are going here for Canada and mining?
I think we still need to see how it plays out. We're hearing the right things. I've spent an enormous amount of time in Ottawa over the last few years, along the lines of what we're talking about here, of talking more about mining and the opportunity set. And from a government perspective, it was really us trying to ensure that the government was aware of the opportunities that we see, based on our huge business in Canada in mining and in many parts of Canada. And so I think it's fair to say that the previous government was not as focused on the resource development space as this government seems to be, but we still need to see how it plays out. But I can tell you from our early engagement with the new government that it is much, much more positive in terms of understanding the opportunity, understanding the role that government can play. And that was what we were trying to do in Ottawa, is saying, look, the days of an industry being able to go into remote areas and develop important deposits on their own is likely over, just given the high cost of doing business. And we went to Ottawa not asking for anything, really. We're saying, look, this is what we're going to do. This is likely how we're going to do it. We're still doing our studies, particularly in the far north. And here's why we think you should get involved, because we think you can leverage off of, you bringing capital and bringing attention to the industry, and working together, we can get a better result. So here we are now, still involved in those discussions, and the government is very close to, putting together important infrastructure projects, et cetera, et cetera. So we're very hopeful, but it won't be just what is decided, but it's how we're going to do it. If we're not coordinated with government and government departments, that would include the military there, and industry, then we're not going to get the maximum result. And so what we see in the far north, and what we see in the mining resource business in Canada, is we still see tremendous opportunity. And as Anthony said, we had choices to make 20 years ago as a business. We decided to build a lot of mines, and most of them were in Canada. And that's where we have the vast majority of business. We have the skills here. We're the predominant Arctic operator and mine builder in the world. We've got a lot of skills. But part of our engagement is even with the Canadian military. Look, if we're doing this and you're doing that, how can we work together? So we're having a lot of different discussions than we would have had over the last few decades. So again, I say I'm hopeful, but we have to do it right. This isn't a matter of putting a port here and a road here and investing in this mine over here or this military base over here on a one-off basis. This needs to be coordinated to be effective. And so we're going to Ottawa in a couple of weeks, again, to have discussions at a very senior level to bring our expertise and our experience of working in the North in those discussions to make sure that we get properly coordinated. So again, been around for 4 decades. In a lot of that time, we kind of felt like we were on our own as an industry. Now we're feeling like, okay, now there is a willingness to sort of work more closely together, invest in critical infrastructure. But I'll add one point, and I make sure I add this point every opportunity I get when we talk about the North. It isn't really about a port. It isn't really about a road. It's also about community infrastructure, social infrastructure, and communities. If we want effective sovereignty in this country, particularly in the far north, that comes from strong communities and strong families within those communities, and opportunities, economic opportunities to provide for your family and to have long and interesting careers up there. So we can't miss that piece. And that's a big part of the reason that we're engaged in conversations and have been for a few years. And that's another reason why we sponsored and put together the Arctic Edge podcast, so Canadians understand the opportunity, not just in the resources that exist in the North, but in the people of the North.
So a systematic approach to the Arctic. I love how you say that, not just build a port or a road, because that is oftentimes the main thing you'll hear is, well, we need infrastructure in the North. But as you say, in a sense, it's more complicated than that. Well, as we wrap up here, Anthony, do you have any final thoughts here on the treasure hunt or on Canada and mining?
I got a couple. It's dangerous to ask me that, Adrian. I'm not short on words. One thing I would just say, and listening to Sean speak there, is that's encouraging for all Canadians. The fact that the government is really listening. Agnico Eagle isn't only just a preeminent gold miner, but their economic contribution to Nunavut. Sean, what's the number, the contribution to GDP in Nunavut? I know it's an astounding number. I don't want to misquote it.
Yeah, we're about 25% of the GDP of Nunavut, and we're looking to invest in the Hope Bay project, which could be another $2 billion. So it's really significant and important. And the best part about that, it creates a lot of opportunities in the communities. But in order to get this right, we have to have a plan to coordinate all of the investment in infrastructure and in mine development and in defense infrastructure. And you know what? If you ask me, I think we're going to get there. There's a lot of, over the last few years, I've been impressed with the quality of certain government and political officials and their willingness to do the right thing and to work hard for Canada. So I think we're going to get there.
That's very encouraging to hear. On the treasure hunt, Adrian, I would just make one last final point, because you raised a very good question about, is it just for Canadians? In the actual collection of the treasure, yes, just for Canadians. But this is such a wonderful thing that we're doing here, and it has, it's going to be inspiring to everybody. So as a hat tip, or as a way to try to bring in a bit of the international community, what we're doing with the help of our friends at the World Gold Council is we're running kind of a ancillary or a side project to this, but related to the treasure hunt, where we're going to let our big international audience know, because not only the Northern Miner, which is global mining news with a global audience, but also mining.com is within our portfolio. And that's an incredible news site that reaches an even larger international audience. So we do have this big audience to talk to. And what we're doing is we're going to have a contest for an international student. For one of them, we'll have games and riddles, we'll have qualifiers, and then we'll have a random draw. And the winner of that will get flown in, all expenses paid, to either Toronto's legendary PDAC conference, or CIM is in Vancouver this year. It'll be one of those two. And they'll have an all-expense trip paid to a leading mining conference where they can take courses, learn more about the industry, meet with some amazing heavyweights, such as hopefully Sean Boyd and others of his ilk, and just have a great experience. So that is one way that we want to let the entire world know what is going on here, and maybe inspire some other treasure hunts around the world.
Okay, excellent. And Sean, do you have any final thoughts before we go?
I'm super excited, and we really look forward to the opportunity to, meet the successful contestant or contestants that, do the work and find the treasure, and look forward to handing over 200 plus ounces of shiny yellow 1 ounce Canadian gold maple leafs from the Detour Gold Mine. It'll be really fun.
So if people want to join the treasure hunt, go to treasure.northernminer.com. Sean Boyd, chair of the board and former CEO of Agnico Eagle, as well as member of the Canadian Mining Hall of Fame and recipient of the Northern Miner 2017 Mining Person of the Year, as well as Anthony Vaccaro, president of the Northern Miner Group. Thank you for joining us. Thank you once again to Fortune Bay for sponsoring this week's episode of the Northern Miner Podcast. Also, big thank you to Sean Boyd, chairman of Agnico Eagle, and Anthony Vaccaro, president of the Northern Miner Group, for appearing on this week's episode. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.